Hey guys, how are my peeps doing today? It appears the markets are still reeling in pain. Fears of inflation, the Delta variant and now Evergrande grow by the day. There are growing concerns that the Chinese giant could be sparkling a Lehman Brothers crash or growing around the world, with the hashtag Evergrande starting to trend on social media. Today, new reports suggest that the Organization for Economic Cooperation and Development believed inflation should continue rising higher for the next 2 years. I found this funny because just a couple of days ago, Federal Reserve Chair Jerome Powell stated that the high inflation being experienced is only transitory. What he omitted to say was that the transitory period could last years. I do not know where in time we started allowing important figures to lie to the American public so nonchalantly. Today I want to go over these two things, plus I want to talk about GameStop in particular again. We know AMC is performing extremely bullish, with its theaters soon starting to accept cryptocurrencies as methods of payments. It's also hosting sporting events and its investor program has been a huge success. GameStop has been a bit of the underdog in the past couple of weeks and months, as the company has been very quiet about potential big catalysts that ought to bring bigger revenue. I want to talk about where the company currently stands and what its outlook is, not accounting for the squeeze. I got some morning videos coming out to you guys starting tomorrow, so stay tuned for that. Before we begin, let me quickly disclose and state that I am not a financial analyst or advisor, and that all contents discussed in this video are provided as opinions. All efforts are placed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Everything presented is evidence I collect, and all opinions are based on research, experience and knowledge on the matter. Shout out to all my Patreons and one-time donors, whose contributions continue to carry this channel forward. Thank you so much to all that have taken a moment and the burden of throwing some love my way. It means a great deal for the longevity of the channel. You guys are the absolute best. Let's finally start with today's content. Federal Reserve Chair Jerome Powell commented just last Friday that while recent inflation readings were a cause for concern, he sees it as a temporary trend by tightening monetary policy. Powell drew the conversation to build a case for why inflation should not be a worry, drawing a lot of praise by the self-proclaimed experts in the financial industry. You see, it's about building the narrative rather than addressing the real problems and talking where they went wrong. You see, for those not following the story closely, Powell is trying to appeal to Joe Biden's administration in order to get appointed for a second term as Fed chief. As such, any statements he gives must be taken with a mountain pile of salt. What evidence do I, some basic normie, have to base an argument that inflation is not really sustainable long-term at these levels? Well, I simply turn to what other organizations in the world are saying. The Organization for Economic Cooperation and Development just today is warning that they see inflation remaining higher for the next 2 years. Higher commodity prices, electricity costs and shipping costs are not helping either. The United Kingdom is expected to have inflation running at 3% by the end of 2022. The self-proclaimed experts are saying today's inflation is transitory, but nobody is really giving hard numbers for how long transitory means. Skeptics worry that high inflation levels could actually last for 5 years. Wall Street is projecting inflation returning to normal in the next couple of months, and market measures of inflation that look 10 years into the future suggest investors are buying central banks' view that there won't be an inflationary explosion involving prices and wages. This view is very incoherent. If Wall Street and other investors expect economic forces to keep inflation elevated for years, how in God's green earth do they think there won't be a long-term impact on the economy? Literally, the only answer I can come up with is that they are all buying into the promises and bold statements made by officials like Jerome Powell without really sitting down and accounting for the effect it will have. It's one of those situations that reminds me of the Titanic movie, where the musicians are playing a song while the ship is sinking, because pretending nothing is going to give out is better than anticipating it wholeheartedly. Guys, in the end the music can only go for so long, and though yes, it is possible that inflation could start being managed a lot better, it is ridiculous to think there will be no long-term impact. I think everything is slowly building up for a big conclusion, a big finale where the world sinks and the crayon-eating tendy apes fly to the moon. My last thoughts on inflation is that they are set to last a long time, and the effects that they will have on other parts of the economy, not accounting the markets since numbers here are all made up, are to be disastrous for the middle and lower class. Already, the middle class is shrinking by the day. Today, a Gallup poll indicated that 18 million Americans can't even afford their medications, a number that is set to continue to grow at higher rates. They keep telling me everything is okay, that this is just a transitionary period. I laugh my way to my broker buying tendy tickets for salvation. Moving on, things are looking bleaker for China's Evergrande. Default risks efforts are slowly looking to be aimed at getting a bailout for the government, because otherwise there is simply no way that this company can survive what's coming next. Concerns that there will be serious spillovers of a messy collapse are growing. Remember how in my cryptocurrency video regarding Evergrande I spoke about how China might get involved by absorbing in some type of way property and assets in order to help mitigate the risk of this handicapping their growth? Well, the Chinese government will help Evergrande, though not outright save it, by having it sell some of their stakes to a third-party buyer, in particular, some state-owned enterprise. As I stated in that video, China stands to try to gain from this as much as possible. The way this will be done is that they will most likely get rid of the non-core business, the non-residential real estate type businesses. After that, sales of stakes that are core of Evergrande's business will come, according to a Dutch bank researcher named Iris Pang. China will become stronger by absorbing key components of their business. I am really interested in seeing how their approach will be, because I know what they want to do is increase the value of their currency with this. Lastly, let's talk about GameStop. Many people have expressed a bit of disappointment in how little conversation is flowing between GameStop management and retail investors, who by the way, own the vast majority of the float. The perfect relationship that Adam Aron has built between investor and AMC has sort of left us yearning for a similar treatment by GameStop. With the company being so hush about its business outside of quarterly earnings or big announcements, I wanted to take a moment and speak to some of the worries investors have. Based on the general sentiment I am reading, it appears that many people have caught on to the headline titles placed by the mainstream media about the company not having a strong fundamental basis to keep its business afloat, and that investors should be cashing in soon. I get it, we are all prone to get a bit shaken when all that we see when we Google GameStop are FUD articles. We are human and we must acknowledge these things instead of ignoring them if we are to make it long term. Given the silent nature that GameStop has given, I will instead come to try to appease the worries of retail investors. First and foremost, GameStop cleared its debt by 94% when it cashed out on the initial run it has earlier this year. This allowed the company to also fill its vaults with cash, which are nearly 4 times as high as they were before. This gives it plenty of space, but also time, to place a winning strategy and get it working before they start getting concerned about not having enough money to operate. Its new impressive management team who have plenty of winning and diverse backgrounds in companies like Amazon and Chewy give me a lot of confidence that they know exactly how to bring a business to the e-commerce stormfront. They have all shown to be extremely competent and savvy businessmen who have decades of collective experience keeping business revenue margins afloat. I have no doubt that they took high positions at GameStop because they knew their own capabilities would bring in a complete change. The thing that you need to account for as an investor is that the media is only telling you half the story. They tell you about the decreasing revenue and profit margins, and how brick-and-mortar stores are soon to be rid of, and how the business model of selling video games is not a good future. In a way, they are right. What they are also doing is omitting half the story that gives people an incentive to join in. GameStop is literally trying to move away from being known as a game-centered store that also sells other components into becoming a strong e-commerce competitor that just also happens to sell video games. This is a big deal, because the catalysts for the continuation of growth for GameStop is amplified tremendously. Take for example the fact that computer sales are growing. We know that GameStop has started selling computer parts and computer chairs and related products. This is a huge boost for the long-term outlook of this company. This type of analysis is excluded from all media talks, and it's perhaps the most important narrative that GameStop has been trying to drive to their investors, especially during their last quarterly earnings. GameStop will be much bigger than video games to the point where I don't even see video games being their best-selling product in the near future. The company has many brick-and-mortar stores, which they have been downsizing to keep only the most lucrative ones. This saves them a lot of money, because by contrast, the digital revenue they are increasing year over year is helping them counteract the loss of exposure that having physical stores bring. GameStop also has the chance to eventually start developing or publishing games. They do not even have to start strong. They can simply begin with mobile games, creating small but effective development teams that can start making products for this ever-growing sector. Gaming is already bigger than movies, and GameStop would be foolish to not want to join in. In fact, I have no doubt that these types of talks must take place regularly. The future of GameStop is bright because they have a winning formula that is backed up by highly experienced people. They have tons of cash to survive being non-profitable for a long time, allowing them to experiment for a while as well. The prospect of growth is not by selling other companies' video games, but rather by becoming a giant that sells all kinds of products and assets, including video games by other companies. If ambitious enough, GameStop could begin developing their own games, which could be an extremely lucrative source of income. Today I bought a ton of shares of GameStop, though not nearly enough, and I will continue doing so because I know that this company is as safe as they come. Be ever vigilant and use discretion when reading media-related articles on companies. We have gone to great lengths here at Simulate and Trade to expose the truth and conflict of interests that the media has when giving financial advice. Now, let's talk about today. The Fed reported that reverse repo operations for today resulted in over $1.240 trillion, setting a new high for the highest reverse repo operation in recorded history. AMC's dark pool transactions accounted for 64% of the total volume, while GameStop dark pool transactions accounted for 44% of the total volume today. According to Fidelity data, buy order flow for AMC was bigger than the sell order flow, with GameStop's buy order flow being twice as big as the sell order flow. Now, let us finish up with a recap of today's performance. AMC traded bearishly, losing over 3% today. It began with a small pre-market bump up, it eventually reaching over 41.50. However, upon market opening, AMC had a hard dive back down to 37.65. After that, it would continue moving upwards for the rest of the day with small retracement periods. It would reach and pass the VWAP, going as far as 39.66 before being hit by a short ladder attack that had it close at 38.82, below the VWAP. As for what I expect for tomorrow, I think it is likely to see a bump up. If AMC is going to have an effective rebound this week, it has to be tomorrow due to future contracts as we had said on Sunday's video. If that is the case, it has to run back to 41 and break out of that resistance. If it does, depending on how much volume it gets, we could see it run to 43 and then 46. I keep these numbers conservative because overall market sentiment is very bad for the reasons we have talked about. AMC holds support at 37.50 and at 36. GameStop traded bearishly today, losing over 1%. The stock opened to a huge single candle that brought it up almost to 200. GME then consequently fell off, trading underneath the VWAP and unable to break out. It reached 186 before it started moving up. It would continue surging with small periods of consolidation until it reached 193 near the end of the day. It was then attacked by a short ladder attack that brought it to a closing price of 189.95, beneath the VWAP. As for what I expect for tomorrow, depending on future contracts, we could see it rising back up and testing resistance at 192.50 and then at 200. It holds support near 187.50 and then around 185. I think once the market sort of finds solid ground, GameStop will bounce back strong over 200. Anything under that is a great deal. I want to thank you guys so much for making it to the end of the video. Let me know in the comments what your thoughts are. Today's big question is, do you fear death? Comment section ought to be interesting today. If you want to help this channel, I have provided links which will be in the description for donations or even a monthly pledge of whatever amount you want. These donations do go a long way in helping me be able to pump videos out. Remember to follow me on Twitter if you haven't already, and I hope to see you guys on the next one. And that is all I have for you today. I will see you guys tomorrow for a morning video as well as an afternoon video. Until then, enjoy the rest of your day and to the moon.